Welcome back. On our radar today is an IT company we don't often talk about. It's Cigniti Technologies, but it's done well. It's up more than 100% in the last 1 year. And just earlier this week, the stock hit its life high. Krishnan Venkatachary, the CFO of Cigniti Technologies, now joins in. Morning, this is Rima here. First, I wanted to talk about your exposure to the travel and hospitality segment. It was 28%, last year. It's now down to 14% as of the March quarter. And it's gone through a very challenging time. Can you tell us what is the outlook? What is the growth for FY22 for this particular vertical? What are budgets looking like?
Good morning and thanks for the opportunity. Rima, it's a good question. Actually, we had about 28% contribution from the travel and hospitality sector in the last year, which has been one of the worst hit sector very clearly. But I think we were able to really do a few things in a very systematic way. While we have retained at about 14% in the current set of revenue, which is net same comparing to the last year in terms of the total revenue. We were able to supplement it with other sectors. But I think in terms of the outlook as it stands, the key notable points is that while the volumes have dropped from all these enterprises, we have not lost out on any clients, and we have done a couple of innovative methods to retain these clients. And if you ask frankly, the outlook in terms of the sector is bouncing back clearly, especially with US and European countries, where the second wave was subdued in US predominantly. We are trying to anticipate that this sector should move up. But I think net for the current year, I expect it to be around close to 16% for the year. But I think for the next couple of years, probably it should bounce back slightly. The effect should be more.
All right, take your point. In fact, we are getting heartening data coming in from the US as well in the unlock from airline tickets as well as the travel and hospitality segment. Krishnan, on the retail and e-commerce front, the last year we did see a big surge in e-commerce sales for all the consumer companies. So has that reflected in higher revenues for you? It was around 17% in the fourth quarter. What is it likely to be going forward?
Yes, I think it will be in the range of about 20%. It has seen an uptick, and we have been winning continuously on retail giants in a big way. And definitely, it's a very encouraging and promising sector, and that has chipped in for our growth in the last year. And we have laid a good foundation, basically, in terms of offering a platform-led services in the retail and BFSI segment. I think that is one of the reasons we are able to penetrate and get better business. And we expect that this sector, these two sectors, and apart from that, healthcare as well, these three will be buoyant and will be contributing in a big way.
Why were your Q4 margins lower than the previous few quarters' margins? What was the impact due to? And your FY21 margins were broadly about 16%. Is there upside to these numbers?
The Q4 predominantly has got two reasons which we have explained in the investor call as well as that. One, we have done some investment upfront in the offering management and also rejigged the entire sales team. We have brought in a CRO, we have brought in few hunters and farmers, and a few front loading of one of the major projects which the billability started only somewhere in April. So we need to absorb the cost out over there. That is one of the reasons clearly in Q4 the margins had a dip, both in terms of the investment in R&D by way of people and in investment in sales and marketing. And if you look at the margins comparing to the last year, we moved from 15.8 to 16.4 in terms of EBITDA. While that remains a very positive number, we don't expect a huge reduction or a huge swing, but I think they are extremely positive on my EBITDA numbers, as we definitely don't go and give out a guidance. But I think with the order book position holding when we commence a year at about 130 million plus, we are seeing a good traction for a growth, which will be more than 2 digits. And that should contribute to the bottom line in a better way. And as we have optimized on major costs, clearly, we expect to be the EBITDA to be north of the last year numbers. And we have laid a plan for the next 4 years in terms of how do we transform the company to a $500 million journey. I think at net at the end of the 4 years, probably we will be definitely north of 20% in terms of moving it on the margin side on EBITDA.
All right, Krishnan, thanks a lot for joining in, giving us all those details. That was Krishnan Venkatachary, the CFO of Cigniti Technologies, planning out a next 4-year roadmap for growth for the company. With that, we're out of time on this edition of Trading Hour with the news that